I'm joined by Yahoo Finance reporter Akiko Fujita. Akiko, thank you so much for joining us. Boy, you saw that swing yesterday. The market's dropping more than 2,000 points in the green right now. What do you attribute? Is this the stimulus package that folks are thinking about that's leading it to the green today?
Yeah, it's been a bit of another roller coaster ride today because we saw the Dow up more than 900 points in the morning on the expectation of the stimulus. We started to come back down a bit on questions about the timing of it. And now that we've gotten a bit more reporting out in terms of what this could look like, that could perhaps be swinging things back. But there are still a lot of questions about how effective any of these measures will be. You take the payroll tax cut, for example, that has been floated out there from the White House. You know, that does put more money in the pockets of consumers, but you have to wonder how many consumers are actually going to go out and spend it if that's the intention of it, because people are just worried to kind of go about their daily lives right now.
When you talk about that drop on Monday, the single biggest drop since the 2008 financial crisis, how do the numbers we're seeing today compare to back then? You know, how long is it going to take to see a real bounce? Is this it?
So if you look strictly at the numbers and you look at September 2018 when we saw the big crash there because there wasn't that big bank bailout. That was a 77 point drop in the Dow. Yesterday we saw 2,000 points, but you look at the overall numbers, the Dow was trading just above 10,000 at the time. Today we're looking at more than 24,000. So I think that the numbers to numbers comparison may not exactly be accurate. Having said that, I think there's a lot of concerns this time around about what kind of response, what kind of tools are available to respond to any kind of decline, any kind of recession. You know, 2008, central banks had this coordinated effort. That's when quantitative QE or quantitative easing started. Now, a lot of these central banks, the Fed, of course, but the ECB as well as the Bank of Japan, they're in negative rates right now because there's a lot of concern that they don't have enough ammunition to step in and push the economy, stimulate the economy, which is why so many people are looking to the government's, the fiscal side, to do the work.
You know, you're looking also at the oil markets yesterday. I mean, it's hard to imagine that there won't be some major companies filing for bankruptcy after you're seeing drops like this. I mean, how are these businesses protecting themselves in this type of environment?
Oil is almost a separate issue, I would argue. I mean, yesterday what we saw was this price war essentially that erupted between Saudi Arabia and Russia. It's really the U.S. producers that are kind of caught in the middle. And as you point out, they have huge debt loads that they are taking on. So there is a lot of concern that if we're talking about $30 to $20 a barrel, that could really lead to basically default at that point. When you look at other companies, though, and specifically the coronavirus, I think you want to look to the airlines in terms of what companies are doing. Today, we got more reports from the major airlines saying they're going to be cutting their routes. Southwest CEO coming out and saying he's going to take a pay cut as well. You can expect additional layoffs as well because we've seen all the photos of these empty flights that are taking off. Airlines are having to adjust, but there's still going to have to be additional adjustment right now. And what we're hearing increasingly is not 2008, it's more like 9/11 in terms of the travel sector.
In terms of the travel sector. I keep hearing recession, but I'm wondering, I mean, is this an equivalent to a Great Depression? I mean, how serious is this? How significantly should we expect to buckle up when it comes to the economic situation?
Yeah, I think that's still a big question mark. But the reason why a lot of people are saying recession is because you look at the market reaction and the numbers that we're seeing. One of the things that I think a lot of financial analysts are pointing to is the yield on the 10-year Treasury, which broke below 1%, which has never happened before. Yesterday we saw it at 0.5%. Today it's bounced back just a little, but that's always kind of been an indicator of where investor sentiment is right now. So if you look strictly at the numbers, you can argue that there's about a 90% chance right now, at least according to banks like JP Morgan, that are saying that there will in fact be a recession down the line.
Akiko Fujita, so grateful you could be here to break all this down. Thank you for joining us.